Good morning, good afternoon, good evening, and good night. My name's Dylan Love. You're watching another episode of Engine Room, a podcast by Token Metrics. I am joined, as I am every Wednesday, by Mr. Jacob Koch Gallup. Jacob is our joyful and judicious market research analyst. We've also got Forrest, our formidable and fearless crypto analyst and heavyweight trader. Bill's on vacation, Jad's busy with other projects, so you're stuck with us, guys. I'm sorry. Thanks for watching this video on YouTube. We highly encourage you subscribe to Token Metrics on YouTube. Give this video a like. If you're listening on your favorite audio podcast platform, then we're happy to have you along for the ride. Guys, I'll begin with a quick little personal anecdote for this Wednesday episode. I'm having an exceptionally Wednesday kind of Wednesday because I woke up not to the sound of my alarm, but to the sound of a smoke alarm that needed to be changed. So before it was even 7 o'clock in the morning, I've already been to 7-Eleven and back to buy 9-volt batteries. How are we all doing on this Wednesday?
Sounds awful, but I've been there. It's the worst.
Well,
Yeah, so that's just a reminder to everyone out there listening. Make sure your fire alarms are working.
Yeah,
your carbon monoxide alarms are working.
I highly recommend having a stash of 9 volts on hand instead of needing
good
to leave
investment.
the house. Exactly.
That is investment advice. That is investment investment. 9 volts to keep in your drawer.
At any rate, there's quite a bit of news, as there is all the time in crypto. I thought we might start with this item from CoinDesk, which basically talks about how Chainalysis is teaming up with law enforcement to help them catch criminals who are using crypto as a means of exchange. One of the most interesting takeaways from this leaked deck leaked deck from Chainalysis is that they've found a way to make Monero much less anonymous. If anybody's unfamiliar, Monero is a cryptocurrency whose primary use case is all about being anonymous and undetectable. But Chainalysis has developed a process that's called demixing, which purportedly makes it much easier to pin wallet addresses on Monero with a genuine identity in real life. Supposedly, it's already been used to catch some bad guys. When I interviewed John McAfee some time ago, he told me that all his business was in Monero. What do we make of this little news item? What does it mean if Monero's primary claim to fame is nobody knows who you are, and then suddenly the cops have a way to get really close to who you are? What does this mean for crypto?
Yeah, I'd say it's bad news for Monero and potentially other privacy coins. However, I am not a technical expert on the way that Monero hides people's privacy or identity. So it's difficult for me to comment on this. I could see this being something where they're claiming to have a little bit more ability than they actually do, just to scare people and keep them from just keep them from wanting to use Monero, right? Influence their decision-making process around conducting business, and something that's very difficult to track. Regardless, I mean, there's a couple different options on the market for privacy coins. There's Monero, there's Zcash. You can even use Ethereum and then mix it. Again, I think mixers are going to be under a lot of scrutiny, and as they have been in the past. And I believe they're actually illegal, if I'm not mistaken. However, I mean, people are going to continue to do what they want to do, and they're just going to pick the best cryptocurrency to allow.
Jacob, do you have any
go unchecked?
Jacob, do you have any take on Monero becoming less private?
So I think this definitely hurts Monero's value. Like Forrest said, I don't know how strong their claims are. I'd like to see kind of the evidence and technology that they're boasting about. But yes, it does hurt Monero's value. But as long as, like, if you still want to use Monero to have privacy, that's definitely a great platform to do it. If you need to use Monero to conduct millions of dollars of illegal activity, maybe move somewhere else. Not illegal activity advice, but yeah, I think for the average crypto user who still wants privacy, I don't think this should hurt them too much.
Right on. So let's use this as a little dovetail moment to jump into some more Monero news. If anybody who follows crypto news remembers, it was a little over a month ago that Riccardo Spagni, who was the former lead maintainer and developer of Monero, he also went by the internet pseudonym Fluffy Pony. he was brought into U.S. custody, and he's been in U.S. custody for just over a month. And it was yesterday he was finally released from U.S. custody. He's a South African citizen, but he was being held in the U.S. on fraud charges that were tied to crimes that were allegedly committed in South Africa between 2009 and 2011. He was working for a company called Cape Cookies, and to put it all in a quick little soundbite, he was basically inflating invoices. He was overcharging people fraudulently, and then transferring that money to a bank account that he controlled, as opposed to his bank account pertaining to the company. This is all alleged. It's all, none of this is confirmed. But it's very interesting to me that the U.S. should be this interested in a fraud case from more than 10 years ago, when this guy just happens to be the lead developer of this privacy coin that we just discussed. What do we make of U.S. authorities holding a South African citizen who just happens to be the main guy behind a privacy coin like Monero? Is this the whole story? I don't think it's the whole story.
Well, it's interesting that they just recently claimed to have found a way to track Monero users.
Yeah.
At the same time that this guy cuts a deal to settle the fraud charges. So, obviously he's probably going to be one of the most educated people on how Monero works. And if there is a way to track Monero users, I'm sure he would be one of the best resources to go about trying to find that way. So it's interesting. The timing of it is definitely interesting.
Well, to be clear, there's no settlement. This is just, he's now going to return to South Africa and address this in court, is what I understand. There's a quote here I'm reading Cointelegraph right now. He says, Spagni says, "I am actively working with my attorneys on a way to return to South Africa as soon as possible so I can address this matter and get it behind me once and for all. That's what I've always wanted to do."
Gotcha.
I smell some BS there. If that's what he's always wanted to do, he could have done it 10 years ago. So I don't know. So I feel like there's some mistruths on both sides of the thing here. We know that the US has far more power than it likes to let on. And I'm very curious about what kind of conversations this guy has had with various law enforcement agencies over the course of his month in US custody. That's kind of crazy. I don't know. Jacob, any thoughts from you on this?
Yeah, I mean, I agree. I think there's something fishy going on, and it's definitely both sides. The US wanting to crack Monero and the founder of Monero wanting to get his shady past behind him. So there's something, maybe some deal making going on, something that we're not seeing, something that the press doesn't know. And I wouldn't be surprised if it comes out in a month or a year that they did a deal.
Oh man, if they crack Monero, they're never going to tell anybody. If some law enforcement agency figures out a way to, in a bulletproof fashion, to reverse engineer every transaction and tie it to a specific identity, we will never know about that. We would never know about that's like on the level of national security secrets. I feel like. Anyway, to me, this all serves to underscore this main point that the secret is out, that crypto is useful and valid, and it's a certain kind of technological magic. And now we have regulators and law enforcement agencies around the world. They want in on the magic. So it's an exciting time to be paying attention to this stuff. Sorry, Jacob, you sounded like you had something else to say.
Yeah, no. Well, I mean, I think this is also a good transition into Coinbase proposing crypto regulations to U.S. officials. It just came out on Monday that Coinbase is working on a pitch to federal U.S. regulators on how to oversee the crypto industry. And they're going to publicly roll out the proposal in a few days. And I think really what it's going to contain is just the company arguing what should and should not be defined as a security within the U.S. Under crypto rules. And I mean, I've been thinking about this and I don't love it, but I would rather a company be lobbying for these regulations that knows crypto. Coinbase knows crypto, their business is crypto, their revenue and profits are in crypto. So their investors are going to be concerned with how crypto gets regulated rather than some big oil company or something that really has nothing to do with crypto, telling the US regulators how to regulate crypto. But I know you had some issues with this, so I'd love to hear about
Yeah,
that.
the idea that Coinbase is going to take ideas to regulators and say, here's how you should be policing us. That's like drug dealers telling cops how to do their job, is kind of what I think. And now I'll admit, I'll be the first to admit, that's a pretty cynical take, but I also think it's pretty, it's pretty accurate. I am a longtime Coinbase user. I have beef with the company for a number of reasons. Primarily, like Coinbase is on the level of becoming a too big to fail kind of bank in a certain sense. It is a extremely large and extremely centralized exchange. You do not hold your private keys, so therefore you don't actually own any of the assets that are in Coinbase. If Coinbase goes down for whatever reason, then you can't make a trade. If you want to talk to a human being in customer service, the only way to reach a human being in Coinbase customer service is if you've been hacked. They don't want to hear from you. So yeah, my cynical take is that Coinbase doesn't care about their customers and they want to be regulated as lightly as possible. So I'm not too interested in their ideas of how regulators should be regulating the industry that they basically dominate in the US right now. Super
Yeah,
curious for what
well,
Forrest has to say.
yeah, well, real quick, my idea, just based on your analogy, is we know that US regulation is coming for crypto, no matter what. Like it's a definite, it's 100%. So using your analogy, if the police are saying 100% we're going to regulate these drug dealers and drug transactions, then I would rather drug dealers propose the regulations than people who aren't in that space, which would be a
I see.
analogy
I
to
see. So
Coinbase.
you want the drug dealers to say, "Come on, man, weed isn't so bad."
Yeah, at least they have some say in the regulations that are 100% going to be
Like
coming.
we can all agree heroin is more serious than weed. I don't know. I don't know.
Yeah.
Let's not tease that out too much further.
Yeah.
I don't know. Forrest, what do you make of all this, man?
Yeah, so I think, like you said, regulation is somewhat inevitable. What my main concern is the difference in regulation between centralized finance, stuff like Binance, Coinbase, perpetuals exchanges, derivatives exchanges, and decentralized finance. I really don't want to see decentralized finance get regulated too much, and that's because it's decentralized finance. It's not supposed to have in it, which that's my main concern. But there's common ground. There's compromise to be made in terms of regulation. I think when it comes to the centralized services, a certain amount of regulation could be a good thing, right? It could. I mean, how are you going to get a Bitcoin ETF passed through and make Bitcoin available to people who invest through traditional means like their 401ks or their financial advisors without some form of regulation, right? So some form of regulation could be good and probably will be good. I don't want to see anything get over-regulated, and I don't want to see it creep into decentralized finance because DeFi is DeFi for a reason, and when we don't want centralization to be creeping into DeFi because then it's no longer DeFi. And ultimately, I mean, DeFi, the developers of these DeFi protocols are smart. They're always going to find a way to evade centralization. So I think they can try to regulate DeFi, and it could hurt DeFi in the short term. But I think it's always just going to move away from regulation, whatever that is.
Right. So I'll repeat something that I brought up on an earlier episode of this podcast, where the attitude in China seems to be very much about innovating like crazy and then regulating after the fact. In Europe, it seems to be very much about putting out regulations first and then entrepreneurs innovate within those existing regulations. Here in the US is much more of a hybrid thing where innovation and regulation is kind of a tug of war happening at the same time. So with all of us here in the US, I feel like we have a perfect vantage point to all this friction, and that is what it is. It's friction. I can't imagine. I'd love to be a fly on the wall in Brian Armstrong's house, the Coinbase CEO, to see what he's going through on a daily basis. I don't think that guy's sleeping very well lately, to be honest with you.
No.
Yeah, at any rate. While we're talking about Coinbase, I want to direct anybody who's curious about learning why Coinbase might not be your best exchange in the U.S. Go check out our blog. We've got a really interesting blog post called "Why You Probably Shouldn't Be Using Coinbase." Coinbase certainly has some advantages, but it's also got at least as many disadvantages, especially if you want to cling to any kind of ideas about sovereignty, the kinds of ideas that inform the Satoshi white paper. While Coinbase makes an excellent on-ramp for crypto, like my parents could understand Coinbase, for example, it's a diluted version, I think, of what crypto is really all about. And at the risk of derailing too much, I know we've got Forrest here. Forrest is our superhero trader guy. We were talking a little bit about Coinbase versus using MetaMask plus Uniswap. Forrest, you were telling me that using MetaMask plus Uniswap, that's going to come with crazy gas fees. Yeah. How might we get around that? What's a sensible way to trade without paying crazy transaction fees?
Yeah, so you really have to decide whether you're looking for a centralized solution or a decentralized solution. And for most people, that actually it's less about centralized versus decentralized and more about access to the trading pairs in the cryptocurrencies that they want to invest in. So what you'll find is my personal favorite centralized exchange is Gemini. I like them for a variety of reasons. I'm a big fan of the security measures that they take. I'm a big fan of I think their fees are very reasonable, and they have access to most of the big large cap trading pairs. So if you're somebody who's located in the US, you don't want to pay absurd fees, and you just want access to some of the largest cryptocurrencies out there. You're not really speculating on smaller cap tokens. Even they do have a few, they do have some. But if you're just looking to get into the big stuff like Bitcoin, Ethereum, Uniswap, Aave, some of the larger cap tokens, they have access to the vast majority of those. They also don't charge withdrawal fees to move your crypto out of their exchange, which I believe they're the only exchange that does that. Right. So when you go and you buy, $3,000 worth of Bitcoin or cryptocurrency, most exchanges are going to charge you anywhere from a couple bucks to maybe $10, $15 to move that off of their exchange, which is just really, really annoying. Yeah. Right. So that's one reason I'm a big fan of Gemini. If you're looking for access to smaller cap altcoins, what you're probably going to find yourself doing is moving to a decentralized exchange. And that would be Uniswap or a DeFi or a DEX aggregator like 1inch, where it just routes the transactions through whatever DEX gives the best rate. So you've got, Uniswap, you've got Integral, you've got SushiSwap, all these different DEXs. Some might have better rates and less slippage than others. That's going to come with pretty high transaction fees on the Ethereum network, right? When gas is expensive, when gas fees are expensive on Ethereum, you can pay anywhere between $20 and $80, $100 for a single trade, which is fine if you're an institution and your trade size is $1 million, because in terms of basis points, in terms of percentage points, it's negligible. But if you're just looking to buy $500 worth of a cryptocurrency on Uniswap, and then you have to pay a $50 fee, well, that's a 10% fee, and that's not really tenable. So there are layer 2 exchanges and layer 2 solutions coming on board, especially in the derivative space. So if you're somebody that's looking to trade on leverage, right, there's decentralized perpetual exchanges or decentralized derivatives exchanges, much like Uniswap. Just they allow you to leverage up your capital. And two good examples of those in the decentralized space would be Perp Finance, or Perpetual Protocol, and then DYDX. And there's also a new one coming. I got some insider information. There's a new one coming out. It's expected very soon from the team at Alpha Finance. Now, they announced this back in December of 2020. Their perpetual swap platform. But I've heard very recently, as of this morning, that they are putting the finishing touches on it, and that is going to be available soon. So Alpha token looks like a pretty decent buy at these prices right now. That's not financial advice.
Not financial advice, but very interesting information at least. Yeah, very good. That tells me that I kind of want to get Alpha Finance, somebody from Alpha Finance, onto the interview show, Crypto Hot Seat on Token Metrics TV.
100%. Yeah.
I bet we could have a pretty interesting conversation. Anyway, Forrest, thanks for all that input, man.
Mhm.
We've got more news to get through, guys. I feel like Jacob, what do you got for us?
Yeah, so I guess this is a little bringing it back to Coinbase and maybe centralized companies that we don't love so much, and that's Robinhood. They just announced on Monday that they're testing their crypto wallet, which is going to have, right now you can purchase and sell cryptocurrencies on Robinhood, but the wallet will allow you to send it and receive it. And so they announced it. There's now a waiting list where you can get early access to the wallet. It seems like Robinhood is, since they want to focus on retail investors and they're moving into crypto. They also said earlier this month that they're going to roll out crypto recurring investments, allowing users to buy digital coins commission free with as little as $1 on a schedule of their choice. I kind of have a problem with this, and I think a lot of people do as well. I think the hardcore crypto community and hardcore investing community hates Robinhood. So you could say all my homies hate Robinhood. But I think it's probably still a big move in crypto, because they reported after Q1 that 9.5 million users traded cryptocurrency on their platform in the first quarter of 2021. And it's interesting right now, obviously you can just buy and sell crypto on Robinhood, but once they start allowing storage of crypto in their wallet, more advanced crypto transactions, you're getting more in depth into crypto. There's going to be all these unseen fees to transfer it from Robinhood's exchange to Robinhood's wallet, and they're probably not going to give any explanation of how these fees work, how gas fees work, to retail investors who have little to no knowledge of crypto. So I think it's probably going to be a shit show, because we know that Robinhood does not give information on how advanced things work, like options trading. They're not going to give it information on how crypto works, how gas fees work, how a wallet works, how when you store it, when you have your crypto in Robinhood, it's not actually your crypto versus it is when it's in your wallet, and you can't sell it immediately from your wallet. You then have to send it to an exchange or transfer it. So I think it then creates a lot more problems, a lot more questions. It makes it a little more advanced. And I think the normal retail investor is not going to have little to no crypto knowledge. So yes, they can go on Robinhood and buy $100 worth of Doge, but once they transfer that to their wallet and have to pay all these fees, then it starts getting a little sketchy and a little, I think, muddled up.
Yeah, this feels like a great time just to put out a blanket reminder that the cryptocurrency paradigm really calls for the individual to be their own bank. And that means taking your security seriously. That means retaining your private keys. If you don't have a private key or you don't know what that is, then congratulations, you don't actually control your crypto. You just are living in an illusion that has you convinced that you do. I think, Coinbase and Robinhood, companies like this, they make excellent little onboarding on-ramps or red pills to kind of wake people up to this stuff. But as long as you're using them, you're kind of being slightly taken advantage of. Fees that aren't disclosed. They're not going to talk to you about gas fees and things like this. The founders of these companies are billionaires for a reason. It's because they're taking money from you a little bit at a time, and doing it at scale. So yeah, if I could condense that all to one little soundbite, it's be your own bank. Take your money seriously, learn everything, and get obsessed about where it's going and why. And I'll step down off my soapbox now.
Yeah, they're definitely taking a little, like 5 cents, 10 cents. I mean, I think there was a report that came out that obviously Robinhood was working with their kind of their their stock liquid supplier and taking these little commissions off every single trade, whether it's 1 cent, 2 cents, 5 cents. And if you add that all up, they're making millions and billions of dollars.
Yeah.
So there's definitely some sketchy business going on, especially that Robinhood also, when the whole AMC and GameStop news was
Yes.
going on, and when they were rocking, they just stopped.
I was
trading
paying
on that.
I wasn't actually working for Token Metrics at that time. I came on board slightly after that, but that was a really big deal in my circle, because suddenly people who didn't care about the stock market were very, very interested in the stock market, whether or not they were Robinhood users. I think we're going to remember the GameStop short squeeze 10 years from now, 50 years from now. That's going to be remembered as a little bit of like a financial wake up moment for a lot of people. And of course, it dovetails beautifully with cryptocurrency, because Robinhood halted trades of GameStop and AMC. Well, this doesn't, if you live in a crypto paradigm, this is impossible. This can't happen in a decentralized, we should specify, in a decentralized crypto paradigm.
That's what I'm worried about. Are they now going to then start halting trades on crypto once they have control in the wallet? I don't know. It brings it into, I guess, concerns on a centralized versus decentralized crypto platform.
Hey, is it time to talk about the patches, the crypto.com patches on the Philadelphia 76ers jerseys?
Yeah.
Well, we all know that. How should we crack this nut here? NBA players have disposable income. Steph Curry buys NFTs for hundreds of thousands of dollars and so on. So I'm kind of not surprised that there's news lately that the 76ers have a deal to have a little crypto.com patch on all their jerseys. Now, of course, we don't know any of the deals, the financial terms behind what it took to actually get these patches out there. But I'm not interested in it as a business deal. I'm interested in this as a piece of public-facing crypto rhetoric. You know, lots and lots and lots of people love basketball and pay a lot of attention to the game. So seeing this patch out there, it's just one more shining little lighthouse of, hey, are you paying attention to crypto? Do you know what crypto's all about? Your favorite NBA players probably do. Don't you want to be like your favorite NBA players? That's kind of the subtext I'm detecting in all of this. How do you guys make it?
Yeah, I mean, it's net positive. I mean, I'm not a huge, again, I've got issues with centralized exchanges, a lot of them. Crypto.com, not a huge fan. Again, they don't give you custody of your cryptocurrency, but I mean, that is what it is. But just any exposure to the larger world that doesn't know about crypto is going to be a net benefit. It's the network effect, right? The larger the network grows, the more value that it creates, and the faster its value starts to increase. So just reaching a massive audience of people when you start talking about the NBA. So it's going to be a really big thing. And I'll also segue that into, I mean, that's also a very good thing for a project called RumbleKong. This is an NFT project. It's a 3v3 basketball game, and your NFT is your character in that basketball game. Steph Curry and a couple of other NBA players already own some of these NFTs, and now we're seeing crypto start to move. Crypto advertisements start to move into the NBA space. I wouldn't be surprised at all if the NBA audience really starts to get involved in crypto, whether it's through NFTs or through just, the advertisement, the patches. I think it's, that's a pretty decent product market fit. And I think a lot of these people are going to be very interested in crypto.
Yeah, I mean, Mark Cuban started accepting Dogecoin for Mavericks games, but I feel like that was more of a publicity stunt than anything else.
Yeah.
It definitely got him some press, but I don't think it got people talking like, oh, Doge, I should really buy some of that. This seems much more subtle and kind of the long game. So I think this might actually move the needle a little bit more effectively. Speaking of awareness, there is a poll. I'm reading a report from Cointelegraph saying that 37% of Texas residents want to go the way of El Salvador, in which in which we basically the state of Texas would start making crypto a normal way to pay for things. This
A
is
legal way to pay,
yeah,
legal
well,
currency in Texas.
one does not immediately beget the other. It needs to be legal as well as normal, I think.
Yeah.
But I hear what you're saying. Yeah, this is a Newsweek poll that surveyed more than 9,700 voters, and the number came back from Texas saying that 37% of Texas residents would vote in favor of a ballot measure to make crypto a legal form of tender, and 42% said they would support crypto-friendly legislation on excuse me. 42% would support crypto-friendly legislation akin to what they have in Wyoming. So the water level is rising here. I mean, it seems like every week we come out and we start talking about, hey, this small thing is happening and this small thing is happening to make crypto more mainstream. And then here's like a slightly bigger than small thing. And pretty soon, it's only a matter of time, guys, before we're going to start talking about, some state or collection of bodies has said, hey, we're going to make crypto a really legitimate thing. That Walmart Litecoin news, while it was absolutely fake news, it was highly, highly credible for a number of reasons. So I think we're on our way to having that kind of news item come out and have it be completely true. Maybe it's Best Buy, maybe it's Microsoft. Who knows what it could be? But this stuff feels inevitable to me. I don't know what you guys think.
Yeah, 100%. I mean, it's like I said, the network effect. It's slowly swallowing the world. If you conducted that poll a year ago, I guarantee you it wouldn't have been 37% of people that were on board with that. But now that there's been some social proof in the space, we're going to see that number continue to increase. You poll those same people a year from now, and it may be well above 50%, right? And this is the reason why I think we're moving away from this. In my opinion, I predict that the crypto space is going to be moving away from this 4-year boom bust cycle of Bitcoin driving the market, because there's so much innovation and so many use cases now that didn't exist a year or two ago, let alone 4 or 5 years ago in the last big market cycle. Right. So traditionally the market moves in these 4-year waves, but that's been largely driven by Bitcoin's halving events. Right. So now we're seeing total adoption from the world at a rapid rate. And we're seeing more innovation in things not only in Bitcoin adoption, but things outside of Bitcoin adoption. So I think the effect that Bitcoin's halving cycles have on the total space, the total cryptocurrency space as a whole, is having a decreasing effect. And everyone's worried about, like a 4-year bear market, but we're seeing these signs of adoption hit so rapidly that I'm not so sure we're going to have another 3-4 year bear market. Well, of course, there will be some boom bust cycles and the overall economy will affect the prices of crypto. But I wouldn't be surprised if we see certain assets that get accepted or have big news or have an ETF go live or an ETF proposal accepted, absolutely run up in value in the middle of what would normally have been a bear market. Right. So, yeah, I think all this stuff is really good, and we're seeing increased adoption, and that's fantastic.
I love the idea that this is a kind of technology that makes the world smaller. And what I mean by that is, regardless of whatever political situation is going on, regardless of which country is sanctioning which country, you can still transact with these people. Just as you can send an email to the opposite side of the earth and, it takes a second to get there. I could send money to Australia and it would take about, 10 minutes or less to clear on Ethereum. So yeah, the world is getting smaller, even though it's staying the same size. I'm bullish on humanity. How's that? I'm bullish on humanity for this stuff. I don't know, Jacob. Do you have any thoughts on this?
I don't think so, but this is a little transition. But I've been focusing on this, and I guess I want to hear your guys' thoughts. So I'm going to turn the question back on you. What do you think about the NFT market? Because we were super, it was expanding a lot throughout August, but now I've been reading a headline saying that the NFT market has died. And the reason for this is it says crashing floor prices and a sell volume signal is causing it to die. So And we also see Bloomberg reports that most of these NFTs are illiquid. So it says, despite the $1 million of sales for select one-of-a-kind NFTs, record-breaking sale volumes, it shows that in the past 90 days, 73.1% of NFT assets had only one transaction. So yes, you could attribute that to hodlers holding their NFTs for a year, but I don't think so. I think it's that they can't sell them. I mean, and we have the COO of Non-Fungible saying that maybe 90% of collections minted today are totally useless and meaningless. On August 30th, there was a high of 138,000 daily sales. On September 21st, yesterday, there was only 42,000. The most, and then here's one more statistic I can throw at you, is that the most actively traded 3% of collections account for 97% of all dollar volume. So maybe it's a sign to really look into what NFT projects. It has to be a potential top 10 NFT project. Otherwise, it's useless, and you're probably going to waste your money minting it on the gas fees to mint it. I mean, I think one example of that, and I'll stop talking after this, is that the Sneaky Vampire Syndicate, which I was following because I do our NFT roundup weekly report in our newsletter. I was following that before they dropped. You were able to mint up to 3 for 0.08 ETH. And I just looked recently, and they're now, the floor price is about 2.5 ETH, and it was in the top 10 traded volume of collections. So I guess the key is to really know what NFT collection is going to be good. And I mean, the only reason why I thought that was going to be good is it was the same artist as the Bored Ape Yacht Club collection.
I would really hesitate to say the NFT market has died. I don't think it's even really begun. You know, we're not talking about NFTs on the level that we're talking about crypto. I think theoretically there's lots of room left to grow. I think what is happening is that people who are actively playing in the NFT space right now are kind of waking up to this idea of, oh, this is a little bit of a game of hot potato. If I'm not careful, I might spend, $900,000 on an NFT that I can't sell. And then suddenly I'm out $900,000, and all I have to show for it is a JPEG that I can prove that I own. So we've talked before on this podcast about how buying NFTs is kind of like a new kind of flex, a new kind of social signal. NBA players buying Rumble Kongs, for example. But I don't think anything's dying here. I think as it expands, and please watch us on YouTube so you can see my hand gestures. As the market expands, it's being met with resistance at the same time. And so what I think is happening is it's about to shrink, not die, but maybe there's a cooling off period before the next stage of growth. And now I don't know very much about the history of high value art sales, physical paintings and things of this sort. But I'd be very curious to dig into that and see if we can draw any parallels there. Maybe we could look at the Dutch tulip stuff, where there was a crazy run on Dutch tulips, and that used to be the favorite crypto analogy before more people understood crypto more fully. I think we might be able to say that NFTs now are where crypto was in like 2013, 2014, where kind of the secret was out, but it wasn't widespread and they weren't talking about it on the news. Certainly they're talking about NFTs on Bloomberg and all that, but it's mostly in the context of, can you believe the price these people are paying for this stuff? Yeah. I think NFTs are going through their weird teenage years right now, perhaps.
Yeah, I mean, I'm hoping that this decrease in volume and people there's being only one transaction in the past 90 days for 70% of NFTs. I hope that's just trimming off the excess fat of NFTs, the shit NFTs. We don't have a word for shit coins for NFTs. The shit NFTs.
Bad art.
Bad art. I hope it's just trimming off these projects that people are just throwing together in a week and saying, hey, I can sell these for 1 ETH each and we can make $3 million off. Okay, I also see, like, not to shit on Rumble Kongs, but like okay, yes, you can use your character in a 3v3 basketball game, but like, is it gonna be fun? Like there's all these projects saying, well, hey, this gives you utility because you can play it in our video game, but like there's also hundreds of video games out there that many people choose not to play. So what's gonna make your game so much more fun just because I own the character in your game? I don't know. I hope this is a trimming off the excess fat of the NFT world, and the strong projects will continue to live. And then there's gonna be a rebirthing happening maybe in a year or something.
Yeah, Forrest, maybe we can go out on you talking about Zed Run. I'm very curious what you make of this conversation, especially with respect to Zed Run.
Yeah, so I mean, what you saw happen in NFTs, or what we saw happen, is there was an explosion in demand, right? All of a sudden, the demand for NFTs absolutely exploded, and it was pretty well timed with Axie Infinity, because Axie Infinity had this big blow up where you could actually play this game and earn money through the NFTs that you earn. So we saw simultaneously the value of all these like high quality projects go up, these art projects, profile picture projects, right? And we saw NFTs that had a high level of utility like Zed Run absolutely blow up, right? And what happened is there was all of this pent up demand exploding, and the supply of NFTs was still relatively small because you didn't have a ton of NFTs out there. I mean, really, you had, Bored Apes Yacht Club and a couple other ones with heavy utility. Even Ether Rocks had more utility than the vast majority of NFTs out there. And then what happened is to match all of this demand and to cash in on all of this demand, you saw a ton of really bad projects pop up, right? A ton of supply came in to meet this demand, and that supply was very, very low quality. So I don't think the NFT market in any way, shape, or form is dying. We just have a ton of low quality projects that aren't going to go anywhere, right? And that people try. It's no different than the meme coins. We saw meme coin demand absolutely skyrocket, led by Doge and Shiba, and you had about 1,000 other meme coins pop up, and some of them pumped and then they all dumped. And it's just because really low quality supply came in to meet that high demand in the short term. Then things cool off and we ramp back up. But those high quality projects with utility like Zed Run, like RumbleKongs, are going to continue to do well. So Zed Run has a ton of utility. It's got a great product market fit, fantastic investors, fantastic team, and fantastic partnerships, right? The idea that you can actually bet on digital horse racing is pretty novel. It's actually now got competitors popping up with D-Race, which whenever you see multiple competitors, well-funded competitors with really solid partnerships and really solid teams, that is validation that the market, the demand for that market is there. So D-Race, I believe they have their token Genesis event, or their NFT Genesis event either this week or next week. So you'll actually be able to potentially buy those horses up front. But that's, to me, validation that the idea of digital horse racing isn't crazy. Even though it sounds crazy, there's demand for it because we're seeing multiple competitors enter the space. But yeah, overall, I don't think the NFT market's going anywhere. What we're going to see is the low quality projects, just like all the low quality cryptocurrencies out there, die out. It's just a cycle that the market has to go through. Whenever you see those big demand spikes, you're going to see low quality supply come in to cash grab.
I think we should end it on that note. Guys, the name of this podcast is Engine Room. We're coming to you on YouTube. We're coming to you in audio. Stay with us. Check us out. Please subscribe. Tell your friends. We're coming to you 3 days a week. This is our Wednesday Roundtable edition, a little bit smaller than usual, but we'll be right back with you next week for business as usual. Thanks for listening, everybody.